Hey everyone, welcome back. In this video, we're going to talk about some of the stocks that I talked about last week. We're going to take a look at the reports that came out and have a little brief overview about it. And I'm going to give my prediction on, unfortunately, what I think is going to happen with the interest rate going forward and rate hikes. So, last week I talked about three stocks that I thought would be a good idea to keep a close eye on. And those three stocks were Enbridge, PG, Procter Gamble, and Coca-Cola. If you take a look at Enbridge is down about 3.5%. A lot of people are thinking that oil prices might continue to go down. There is some consensus that they might actually raise, but it's looking like they might go down. So Enbridge is one stock that I'm going to continue to dollar cost average into as it continues to go down. It's still paying a decent dividend of over 6%, and I think that when oil rebounds, Enbridge is going to do quite well, and that dividend of over 6%, I think is a good value. So I'm going to continue to buy that as it goes down. Procter and Gamble, it's up actually about 1% this week. There have been some fears about inflation, and that's caused a slight switch from going from tech and growth stocks back to the consumer staples and stocks like PG. And the same thing is happening with Coca-Cola. Coca-Cola's up about 0.5%. And I think that, for the safety and the dividend and the quality of the company, that it's a quality company to go into. So I'm actually not purchasing as many of those stocks now, but on days when they do go down a little bit, I do just average in a little bit just to pick up more, because I do feel like with some of the news that we've gotten, there is a chance that the consumer staples might continue to go up. So let's talk about the news that we got. We had a hot jobs report a while back, and now adding on to that hot jobs report, we had two more reports come in. The CPI, which came in slightly hot, not too hot. The inflation is not out of control, but it's not going down as fast as we wanted it to go down. And the PPI came in. That was also a similar situation, showing that unfortunately it looks like, I know in Canada we thought rate hikes were done. I don't think that's the case. I know some people were even saying there might be some rate cuts this year. The market is now starting to price in no more rate cuts. If anything, we're going to continue to hike until the central bank is certain that inflation is under control. Now, the reason why inflation is taking so long to get under control is with these high-paying jobs and there's the state of the economy. People are continuing to spend money, and because people have this idea of, we're gonna get a soft landing, the Federal Reserve is gonna calm down and everything, people are actually not fearing as much about a recession, which is going to possibly induce a recession and cause the Federal Reserve and Central Bank of Canada to continue to increase rates to kind of get the jobs to come down and just to cool everything off. So we'll see what happens. I still think it's a good idea to find quality stocks, and slowly, if you believe that we've reached the bottom, which I'm not sure. I believe that we will not see a lower bottom on some of the stocks that we saw in around November time. But if we do, I'm gonna keep buying, and I think it's just a better deal. I think that from the drawbacks that we've had in the past year, it is too risky to not continue to DCA at these prices unless you have a significant value accumulated in one of these stocks. But if you are newer to investing, or you're trying to build up your portfolio and you want to wait for lower prices, I just find that to be too big of a risk, and I feel it is good to at least DCA and slowly over time. That way, if the market does recover, you're not missing out on too much. Now, I do want to give you guys three more stocks that I think would be a good idea just to keep an eye on and to look out for, and see if you can just do your research and see if any of these stocks interest you. Now, the first stock I'm going to talk about is Royal Bank of Canada. Royal Bank is one of my favorite stocks, especially Canadian stocks, because it's a quality bank. It increases its dividend regularly and has a solid history of growth. You can't go wrong with a company that if you buy its stock, it's going to go up constantly and stably over time, as well as increasing its dividend. That to me is extreme value, and I feel like that is a quality stock to own. Another stock, this one is a little bit riskier, so I want to give you guys a fair warning. Take caution with this stock, but it's Taiwan Semiconductors Manufacturing, TSM. Warren Buffett recently liquidated his position, 85% plus of Taiwan Semiconductor. Maybe he knows something that we don't. Maybe he just feels that the semiconductors are gonna, they went on a nice run, they're gonna calm down. But the stock is down about 5% in the past week. And I feel like, when you can get one of these quality semiconductor stocks at a good deal, you gotta just scoop it up. So me in the past week, I've been buying a little bit here and there, just trying to add to my position. And in the future, I'm gonna be keeping an eye on it to see if it goes down further, to see if I can add some more to my position, because a lot of people, when Warren Buffett buys, they buy, and when he sells, they sell. So I'm not sure that a lot of people are thinking about the long-term benefits or opportunity with the stock. I feel like they're just scared about the China invading Taiwan, which is a possibility, but I'm hoping it doesn't, because if they do invade Taiwan, a lot more stocks are going to go down than just this one. But they have a large market comp of semiconductor manufacturing, and they're a big partner of Apple, which is another stock that I like, but we'll talk about that in a different video. So I'm keeping a close eye on Taiwan Semiconductors to see what happens with it. And the third and final stock, well, it's not really a stock, but I'm gonna add it in this group anyways, is BHK, and that is BlackRock Core Bond Trust. It's a collection of federal treasuries and mortgage-backed securities. It's a very stable one, currently paying an 8.5% interest rate, which is a phenomenal rate. It's gone down about 20% in the past year, slowly making its way back up. And I feel like with the market instability and a lot of fear in the markets, I feel like people are going to be more interested in bonds, and I just feel like bonds are a good thing to look at. So my third and final recommendation to keep an eye on is BHK. If you can pick some up at a good price and just get that juicy 8% yield, I think that's a good opportunity. So that will be the market update and just tips for the week. I hope you guys enjoyed the video, and if you do, please like and subscribe, and I'll be back in the future for more market updates and some of the tips.